All right, we have Dave, the young investor, on the line from Toronto. What's your question, Dave?
Hi, thank you for taking my call again. I really appreciate it. My question is about SNC-Lavalin. Do you own it? And my thinking is Trudeau is going to spend a lot of money on investing in infrastructure and oil and gas investments worldwide. So what do you think of the name? I want to own it for 5 to 10 years. Thank you very much. And can I get street consensus as well? Thank you.
Sure thing, Dave.
Okay, Dave. From my point of view, I'm looking for great companies in sectors that people care about now. And the difficulty here is that because building infrastructure has been a little bit slower over the last few years, especially around natural resources, stock's been consolidating now really since the fall of 2016. Mm-hmm. In the meantime, we've been in a really strong stock market. Now, if the stock were to trade through, call it $58 or $59, then there's significant upside in the stock.
That's the breakout you're looking for?
Technically, I would wait to see the stock breakout. I do think there's an opportunity. It has consolidated very nicely. I do think that the resource sectors can have a pretty good go here, but the stock's stuck in neutral. So I think if you have the kind of time frame you're talking about, you probably do pretty well. I just think there might be something more timely right now. And we'll talk about some picks today. If you truly want to buy something and put it away for 10 years, stock's likely to break out over that period and have a pretty good go. But I would prefer to wait and see it happen. It's been a great market that we've been in, and SNC shareholders have sat out 18 months of a bull market.
All right, the street's actually pretty bullish on the name. 13 buys, 1 hold, and 0 sells at SNC-Lavalin. We got Brian in Millbrook, Ontario. What's your question, Brian?
Please have David's thoughts on NVIDIA, and would he purchase it at today's prices? Thank you.
So, Brian, you may know we've been very bullish on companies that are in the Internet of Things. NVIDIA fits into machine learning. It fits into the Internet of Things. It fits into augmented reality. It fits into autonomous driving. It's in all of these themes. It's in blockchain and Bitcoin. So, look, this is a leading stock in a leading group that is highly economically sensitive. Technology shares have pulled back a little over the last few weeks. NVIDIA is trading very close to its all-time high. This is, I think, the leader in the semiconductor group. We like this and a number of others, but I would buy the stock here. When I think about making an investment, I think about what's going to happen over the next 9 months, and I hope to own it beyond there. But I think in the near term, we've got a leg up coming in this market. We have tested a lot of companies going through the correction we had since the beginning of February, and NVIDIA held in very, very well. It's trading better than 90% of the stocks in the S&P 500, despite having been through a volatile market. So I think it has been tested. They have been repeatedly beating estimates, and I would buy the stock here.
All right, we have Sean in Bowmanville on the line. What's your question, Sean?
Looking to see your opinion on JP Morgan Chase versus Bank of America.
Great.
Showdown.
So, Sean, the good news is here, I think whichever one I pick, you're probably going to do pretty well with. As a thematic investor, I think the most important theme in this market is you need to own assets that do well in a reflationary environment. Right? We probably saw a 35-year low in interest rates in June of 2016, and they are going to work their way higher, likely in fits and starts for the next 20 years. So financial services in particular and banks in particular benefit in that world, and both through growing their net interest margins and from stronger economic environments. So JP Morgan and Bank of America both get you exposure to that. Bank of America is more focused on the U.S. domestic economy. The banking business is very sensitive to interest rates. JP Morgan, a little bit more sensitive to capital markets. I own them both, and I would buy them both here. And in fact, I would buy KBE, which is the basket of large banks, and I'd buy KRE, which is the basket of regional banks. This would be the second biggest weight we have in our portfolios and financials, And I think that the risk reward here is very, very good for rising dividends and from exposure to an improving economy.
And very interesting, very bullish. We're going to be back with David Burrows. He's President and Chief Investment Strategist at Barometer Capital Management. Wants to answer your questions about North American large caps. So give us a call. The number 1-855-326-6266.